First thing I want to talk about, and just go ahead and get this out of the way. People wonder why I have a paid service. Why do I not do this for free? The answer is simple. People who pay attention. Um, I'm not here to give handouts. I'm here to teach you how to do this on your own. And if you're paying for a service, you're going to pay attention to it. It's simple as that. You will never see me throwing tickers out without a reason behind it. I'm here to teach each and every one of you how to do this on your own. If you want to leave after you learn, that is completely fine. But if you're paying for something, you're going to pay attention to it, and that's why I charge. Um, what I'm going to do is I'm going to break my strategy down into 5 different parts. And after I go over each topic, I'm going to let you guys ask questions. The first thing we're going to go over is identifying key levels, which is support and resistance. Basically, all you do with that is you go to a longer time frame, like the daily chart. So what we have here, I'm going to zoom in on this part, and I'm going to look for previous areas. So show you how to do that. Basically, what I'm looking for when I'm identifying a key level is areas of rejection. So basically, you see this chart pull down here, come back up, and it just reverses, just like that. And then right here again comes up, and it reverses off of this and goes down. Then you see it reverse right here. Those are key levels because obviously people are trying to sell here and they couldn't get past this point. So what I do before I start entering plays is I start mapping out resistance and support. Like right here, you see the chart fell off, came down here, then it tried to break back up, but it couldn't. It bounced off 2 times right here. So this right here is going to be a key level. Then I'm going to go over here, and you see this huge gap. There's a gap right here. So I'm going to find the support and the resistance on top of that, which is right here. Then I'm going to map out 3 or 4 of these. Up here at the top, you can see where it reversed up here. So you have to be able to identify these levels in order to know where you're going to enter and where you're going to exit. If you can't identify key levels, you're trading blindly. If you have a guru throwing out ticker symbols, knowing the key levels will tell you when to enter. You should never enter a trade blindly. And then what you do is you go back to a smaller time frame, like right here. And if you look at this chart, and I'm gonna go to the 1 minute first just to show you guys. If you look at the 1 minute chart, you see every time it comes up to one of these key levels, it rejects off of it. And then when it breaks through, it'll run. So you have to know these levels to know when to buy and when to sell. And then you have the 1 minute chart down here, and it confirms rejection, rejection. And I simply got that from looking at the daily chart. But a way to know that your levels are accurate is to look at multiple time frames and see if they all line up. So right here on the 5 minute, we're going to use the 5 minute chart as an example for this whole thing. So right here, we see it rejected, rejected. So I know this is a key level that it has to break over. So I'm timing the entry to break this. So when I see it break over this, that's my entry. Anyone have any questions about how to identify key levels? If you do, type in the premium chat. If not, I will go on to the next part. I just said that I'm breaking my strategy down into 5 parts, and I'm going to go over each part. Where did you get 431 on the daily chart right here? Give me a second. 431 was right here on the daily chart. My computer is not working right on the Webull charts. Right here is where I got 431. You see where it came down, it bounced off support right here, several times. So right here is where I got that level. You hear major versus minor levels. Do you use those? No, I don't. I just go look at the important levels of rejection on the daily chart, and you'll know exactly where you need to enter just by doing what I just showed you on that daily chart. Sometimes you don't have time to go back and map those out, so you use mental levels, and I'll go over that in a minute. Uh, do you always use the 1 day time frame for key levels? No, it's just a matter of looking at multiple time frames on the bigger picture, so you can identify those levels and make sure they match up. You can use the 1 hour, the 4 hour, the daily, but you want to make sure all of them match up, and that's how you confirm that those levels are right. When finding the key levels, are you just looking for a place where 2 rejections occurred? How many rejections confirm a breakout level? Um, I just look at the chart. The more rejections at that level, the stronger it's going to be. So if I see 5 rejections on a chart that's coming up, I know when it does break that level, it's probably going to run pretty big. The more levels there are, the stronger that support or resistance is going to be. How far back do you look? I go back to the daily and just look. I don't scroll back to like the yearly and things like that. Just like the daily or the hourly, and I look at what it's done over the past month or 2 months and so on. And if all-time high, do you use the 25-cent increments? Yes, all-time highs, when it breaks the all-time high, those are called blue sky investments. So what I'm looking for, if it's a cheaper stock, what you're going to see is you're going to see resistance and support in 25-cent increments. If it's a more expensive stock, you're going to see 50-cent increments. And basically, my opinion on that is the reason you're going to see that, say if I tell you to buy a stock at $4, there's going to be a lot of people wanting to sell that stock at $4.25. You're not ever going to hear someone say, okay, I'm buying this and I want to sell this stock at $4.17. It's 25-cent increments, and that's all that is. Do you use candle body or wick for your levels? I use both. It just depends on where they all line up. I get the exact point, and just by doing that a minute ago on the daily chart, you see right here, there are actually 4 rejections right here on this double top. Let me zoom in so you guys can see. There are 4 rejections right here. So you have 1, 2, 3, 4. This candle didn't really get up there, but you see, that tells me right there. And these are all wicks. That tells me that's a strong level. All this is where the candle opened. The wick is where it tried to go and couldn't. But you know this is a strong level, and look what happened when it broke past that. Any more questions on that part? I'm going to try to get this over with this quick. I don't want to hold anybody too long today. Okay, the next part of the strategy is going to be the indicators I use. I keep my chart clean. You don't see a lot of stuff on my chart. The only thing you're going to see on my chart that, maybe a lot of is key levels, these lines right here. I use the 9 EMA. Don't get this confused with the 9 MA. The 9 EMA is the exponential moving average, and this is very important. This is what this strategy is based around. I use the 20 EMA and then VWAP right here, and then of course volume at the bottom. Those are the only indicators I use, and I think that's all you need to be successful. What I've done here is I've taken the hardest form of trading, which is day trading and scalping, the riskiest, and I've made it simple so everyone can understand and everyone can do this. Literally anyone can learn this with what I'm teaching. This is not complicated at all, and these are the only 3 indicators that you need. I use these solely for support. I do not look at these as resistance, anything like that. These are all support. When the candles are over these levels, that means it is bullish. What that means is the buyers are in control, so it's in an uptrend. If it's below those levels, I don't look at it. That means the sellers are in control. It's bearish. So I'm only looking at a stock if it's above these levels. Any questions on those? And for the new people hopping on, um, you'll see how I utilize these in the live trading sessions every day, and I teach as we're trading. It's easier to learn while doing than like I'm doing now, going back and showing you something that's already happened. But I'm just making this video to give everyone a better idea of what it is that I'm doing. General question: with the number of false breakouts starting to understand what people refer to as stocks having personality, in your experience knowing the stock before, you can. I'm a technical trader. I trade on technical analysis, and I'm about to show you a way to prevent those false breakouts. I don't look at news. I look over here and I see if there's a news release. 9 times out of 10, I don't even know what the stock is that I'm trading. I see there's momentum, and I enter and exit solely based on technical analysis. If there's a news release, I'm gonna know that there's a reason this stock is going up. There's a reason the price is driving upwards. If there's not a news release, then it's probably a pump and dump or speculation. When a candle is on the 9 EMA, it's going under, do you wait that minute to finish for confirmation? Yes. You're gonna want to see a candle open under the 9 EMA to confirm that it's bearish. All right. The next one is going to be confirmation to exit on the 9 EMA when a candle opens below it. The next one is going to be pattern recognition. Anyone that trades with me live every day, you guys see me calling these patterns before they happen: head and shoulder, cup and handle, double top, double bottom, things like that. And what I mean by that is right here on this one, if you've seen this double top right here, you would have known to watch that level. If it's a triple top in reverse, you don't want to enter it because you know there's a double top right here. And if you see this curling back up, you don't want to enter before because it could reverse off of that. And that comes down to recognizing the pattern before it happens. If you're going to be a technical trader, you have to be able to recognize the patterns before they happen. Right here, I would have assumed that this was going to be a double top, so I wouldn't have bought until it broke that level. And you see it rejected right here. Came back down, so I'm assuming it's going to be a triple top right here. So I'm waiting for a break of this level, and it broke over right here. So you have to recognize the patterns. Right here is a bull flag. This is the main one that I look for when I'm trading momentum. I look for bull flags pulling back into the 9 EMA for my entry. And you can learn patterns and stuff by reading the books, charting and things like that. But this is all things that you have to be able to recognize these before they ever happen. And if you can't, you're going to enter blindly, and you're gonna lose money if you can't recognize those. The next part, I'm sorry if I'm going too fast. Let me know. I'm just trying to get through this. I know it's Saturday, and I don't want to hold anyone up. The next thing, which is very important, is entry timing. And entry timing is solely based on using the level twos. What level twos are is, you'll see down here, but stock market's closed, so nothing's going to be on the level two. That is the price action. You see everyone that's buying, and you see everyone that's selling. The bids are on the left side, the ask is on the right side. So when you're entering a play, the worst thing that you can do is enter a play looking at a chart, because what happens is you will get caught in a false breakout if you're not looking at the level twos. And for instance, right here, if I said you have to enter at, let me pull this line down a little bit to the bodies. If I would have said you have to enter this stock at 321, a break of 321, so 322, if you would have entered that stock right here, it would have went up to like 322, 323. But if you're looking at the level twos on the bid side, what people are actually paying for it, you would not have entered right here, simply because no one was paying over $3.21 for it. So if you enter looking at the charts, you're going to get caught in those false breaks. But if you enter looking at the level twos, you're going to prevent that, simply because if there is a key level, someone has to pay over that key level for it to move past it. The chart a lot of times will break over these levels and it'll pull right back down simply because no one was willing to pay for it. So the most important thing you can do when entering is look at the level 2 bid side to see if people are paying more than the resistance for it. All right, any questions on that topic? $13.54. Yeah, I'm about to go over that. That's actually what I was going to go over next. Does anyone have any questions on the entry timing? So we look at that, for example, 325, 326. Yes, yes. And I'm about to go over how I would have entered this played. I mean, how I would have entered this play. Is there any more questions on this topic right here? Yes, bull flags and stuff like that, but I'm going to show you how to enter on that also here in just a second. And if you're new here, don't be scared to ask questions. That's how you learn. That's what I'm here to do, is to teach. And I can't teach you if you're not asking questions. I've got one person typing, then I'll move on to the next part. But anyone that's listening to this, you have to. That's the most important thing I can tell you. One, you have to identify the key levels, and two, you have to watch the level twos. If you enter on a false break, it's because you weren't looking at the level twos. And the thing about the way I trade is entry timing. You're not going to enter it right every time. You have to be sure you exit. If I say enter here, break 324 and it jumps to 325 and you enter and it drops back down, you want to exit that immediately. Simply because the technical analysis was right, but the entry was wrong. That same level will stand. It will continue to stand. Over here, reject it again. And then finally it broke it. So it may take 2 or 3 times to get that right. But you have to be sure you cut your losses when it drops back below, because we don't know how low this stock can go. So we're waiting for another break of that area. If it breaks it and you enter and it drops back below, exit again. Third time, do it, enter again, and then you'll get it right. And that's how you minimize those losses. If the stock is extended before it breaks the key level, is it safe to enter, if that makes sense? Yes, the higher a stock goes, like right here you see this big run it went on. The higher it goes, the weaker the breakouts are going to be. And that's what it means. If you ever hear me say overextended, each breakout is going to be weaker and weaker. So you risk running into that final break up at the top. So basically, if we enter down here and you keep selling on the way up and re-entering, you're eventually going to buy the top. So the key to what I do is finding that first or second initial break. And that's what you want to look for. If you see a stock that's had 5 breakouts, you don't want to enter it at that point. The goal here is to catch it on the first or second. The key levels is where I'm stuck, and what to look for. I'm going to post this video. Carol, did you get on at the beginning of this video? If not, I'm going to post this video explaining that. But all you're looking for with key levels is simply... yeah, I'll post the video later. All you're looking for with key levels is you're going back to a bigger time frame and you're finding levels of rejection, whether it's support or resistance. And I showed you earlier, so you'll see in that video. If the level to break is 5 and it runs from 3 in one candle, where would you determine it's overextended? You can't, I mean, you never know how high it's going to go. That's the thing. You just don't want to get caught behind the top. If I alerted at 3 and you miss it and it's at 5, don't chase it. The next thing is, one more person's typing, hold on. The most important thing is catching the first alert. If you don't enter on that first alert, you're chasing at that point. Yeah, if the level to break was 5, you're just going to scale out, and I'm about to go over that. Scaling and exits is the last part that I'm going to go over, and I'm going to keep doing these training sessions weekly, just to keep people up to date. And if you have any questions, and then at the end of this video, you can ask any question about any of this. The next part is scaling and exits. What I mean by scaling is if you buy, you're taking profits along the way up. The dumbest thing you can do as a day trader is add to your position. That's one thing you should never do. We're all guilty of it, but that's one thing you don't want to do. If a stock is going down, you don't want to add to lower your average because you don't know how low it's going to go. If it's going up, you don't want to add because you're solely taking profits from yourself if it crashes. Basically right here, if I would have entered this, I would have bought 20,000 shares, just say 20,000. And then I would have scaled out here, and most people would buy 5,000 here, 5,000 here, 5,000 here, 5,000 here, and that's dumb. All that tells me is you're not confident in your technical analysis, and you weren't confident enough to enter at the full position size from the start. So you have to be confident in your key levels and your entry timing. If not, you're going to eventually lose money by adding to positions. So basically right here, what I would have done, I would have entered here at the break of that. So that 325 break, I would have entered as soon as the level 2 down here said 326. And the way that I would play this is I would ride it up. The next level is going to be 350 just because those 25-cent increments. So what I'm going to do if I have 20,000 shares right here, I'm probably going to sell 5,000 shares. And then I'm going to let it keep going. I took profits off of the table in this area simply because if it crashes, I can close that trade and still be green. You don't want to hold a position all the way up and then have it crash because you don't want a position that you were green in to go red. And that's how you prevent that, is by scaling out. So I would have taken profits right here at 350. And then I would have taken some more up here at the 375 level. So now from a 20,000 position, I'm down to 10,000. I've sold half of my position. So now what I'm going to look at is the 9 EMA. This is where it gets important. You scale out as soon as you enter. But whenever that 9 EMA crosses your entry point, so it crossed it right here. Once you scale out, that 9 EMA is your new stop loss. So I've sold at 320, I'm at 350 and 375. So I still have 10,000 shares. So now what I'm looking at is I'm going to let this stock ride that 9 EMA all the way up. Any stock you see that's running, it's running along the 9 EMA, and you can see right here it did that. What you do is you wait for the pullback, and as soon as you see a candle open under the 9 EMA, that is your exit. Like down here, if you entered at 325, you would have sold your full position all the way up here at $5.06. So you'd have went from $3.25 to $5.06. And that's the importance of that 9 EMA. But you don't want to use that as your stop loss right when you enter. Right when you enter, your stop loss is right below your entry point. And right here, like on a bull flag, if you miss this level right here, your next entry is going to be on the bull flag. So right here, I look for micro pullbacks. What a micro pullback is it simply tells me that people are just taking profits and it's not a sell-off. So what you do is you look down here at the volume. You see this big green volume, and then you see this red volume. The previous green volume is bigger. So I'm looking at this as this is just people taking profits. If you see a red volume bar that's growing and what it jumps way up, that's going to tell you it's a sell-off before the sell-off actually happens. So you're looking for that micro pullback, and then your entry is going to be an engulfing candle. So you would have entered this one right here when it broke this level, and you could have rode it up right there at 386. You know it could be a double top because that was the previous high. So you would take some profits right there, and then once it gets over that, you're gonna let it ride that 9 EMA again. All right. Questions on anything? If there's anything I'm missing, premium members, I know I'm doing this very quickly. If there's anything I'm missing, let me know and I'll be glad to go over it. I always trade the 1 minute candles. Do I need to switch to 5 minutes? No, I'm just showing you the 5 minute here simply because it's a good way to teach this by this chart right here. Anytime I'm scalping, I use the 1 minute chart. If the market is slow, I use the 5 minute. Philip here on these plays, if you enter this and this stock runs up several dollars, you can switch to that 5 minute chart and use that as your exit, because if you look at the 1 minute chart over here, you'll see that it actually dropped below the 9 EMA several times. So if you enter down here and you're way up here now, you can actually switch to that 5 minute chart and use that 9 EMA on the 5 minute chart as your sell indicator, and that will keep you in that position longer. If you miss, let me see. So you only ever trade stocks that's running into a micro pullback. Yeah, pretty much. I look at high day breaks and things like that, pre-market high breaks and all of that, because you're gonna be able to get that momentum if you have it. But if you do see something that starts running for no reason, don't enter when you see green. Wait for that red and then enter on an engulfing candle. So right here, if you would have entered while this was running, you would have probably sold, because if you entered right here while it's running, you bought the top and then it comes back, and then you could have re-entered again, but you bought the top and then you sold the bottom. If you missed the first entry, could your second entry also be the 9 EMA post to the golden candle? No, because you don't know if it's going to hold that 9 EMA. It's only there for support, and just because it touches that 9 EMA doesn't mean it's going to hold it. So you have to wait for confirmation from a technical analysis side, which would be an engulfing candle. How do you make the decision on 1 minute versus 5 minute though? I'm entering on the 1 minute chart. I scout, so I'm usually always using that 1 minute chart. I don't hold positions for a long period of time. When I first got started and I had a small portfolio, I did, because I needed to make more money out of it, and the 9 EMA is the perfect strategy to do that. But now with my position sizing, I just use the 1 minute chart simply because, if I have 20,000 shares of something and it runs $1, I just made $20,000 versus someone that buys 100 shares of it. So someone that's buying smaller shares needs to utilize this 9 EMA strategy right here, and you can switch to that 5 minute chart. I dropped below the 9 EMA on the 1 minute. Switch to the 5 minute chart. Yeah, and if you're wanting to full-time day trade, and you're going to always be looking at the chart, so stick to that 1 minute chart. If there's low volume in the market, you're going to want to use a longer time frame, like the 5 or 10 minute chart, simply because it shows you the bigger picture. If you look at the 1 minute chart on a slow day in the market, the chart's going to look crazy and choppy, and you're not going to see anything that's worth trading. VWAP across the 9 EMA at the top. Does VWAP now become your stop? It's the stop. No, 9 EMA is always your stop loss. The 9 EMA will always be that stop. And you can see right across there and over here, but I solely use that. Normally it's under that 20 EMA, and it's just a support thing. That's all I look at it for. And you can see if you were using the VWAP as an exit indicator, when it came time to exit over here, you would have actually held it longer. simply because it dropped below that 9 EMA before it dropped below that VWAP. All right, does anyone have any more questions about any of this? And I'm gonna continue doing the the weekly like training sessions and stuff, but I could sit here and talk all day about each part of this, but I wanted to give everyone the general idea of what it is that I'm doing. And then we can start focusing on it. I'll start posting videos on YouTube of breaking each one of those down with live videos as it's happening. The same rules apply with trading 5 minutes and 1 minute chart. Here's the difference between that the 1 minute and the 5 minute. Your entry and your exits are going to be a lot faster on the 1 minute chart. If you're exiting on the 5 minute chart, say you enter right here, and the stock crashes, and you're solely looking at the 5 minute chart, your exit's going to be a lot later than it would be on the 1 minute chart. So the 1 minute chart for quicker exits, if you're trading a high stock that's like very volatile, the 1 minute's going to be better because if it does crash, you're going to catch it a lot sooner on the 1 minute chart than you would on the 5 minute chart. The 5 minute chart, 10 minute chart, that's solely for people that can't sit here and look at the screen all day. Can you please show us the same example of entry and scaling on the 1 minute chart? Yes. We actually traded this one yesterday, but the market was bad, so we just scalped it. Basically, right here, what you're gonna do on this one, on the 1 minute chart, is you're gonna same level. Of course, you see the multiple rejections right here, so I know I have to enter here. So I enter here, and then what I'm looking for, I'm gonna sell if it drops below my entry, and you can see it held support at my entry level, so I'm still holding the stock. It broke out, ran up here, came back down, held that support. When a resistance is broken, that becomes support. So I'm holding it, and I'm gonna wait on it to run. Rides up, 325 up here to 343, pulls back, and I would have taken profit in this area right here. So I would have scaled in this position. So 335, so that's a 10-cent profit. And the reason I would have done that is because there is a red candle that dropped below the previous green candle. Would have sold half of my position here, and I would have let the rest ride up, and it kept running, pulling back into that 9 EMA. And then the rest of those shares are going to be an exit under the 9 EMA, so right here. So 370 area. And then what I'm looking at on that 1 minute chart would be a break of this. So 386, you see it comes up right here, hits 4, and I would have scaled out at that 4 position simply because it's 25-cent increments, and then I would have held. And then when I see a candle that drops lower than the previous green candle, I'm going to exit. And then I'm going to wait again, and I see this high up here is 405. So what I'm going to do right there is I'm going to enter that 405 break, and I'm going to let it ride. It comes up into the resistance up here that I already mapped out, so I'm going to sell half of my position there. And then I'm going to let the rest ride unless it drops below my entry point, which was over here. That's my stop loss. And you let the rest ride that 9 EMA. Once that 9 EMA crosses your entry point, which was right here, 405. So when you see the 9 EMA hit 406, that's your new stop loss. And as it rides up, you can see that no candle opened below that 9 EMA until right here. So you would have sold the last bit of your position right here. from the first entry. I would have still held because that was quick right there. These are 1 minute candles, and if I entered here, I'm looking at the bottom of this candle, and it never dipped below that. So when you first enter, your stop loss is going to be the previous candle before it, the bottom of that. So your stop was down here. If you're scalping, you could have, I mean, exited and then re-entered right when it tipped back over, but you gotta watch out for that. So basically, if I enter right here on this break, when this candle tipped over that one, my stop loss is going to be down here below this wick at 344. My entry is going to be at 353 when it breaks that level. And then if this candle dips below the previous red candle, that's going to be my exit on entry. When using a margin, which I'm planning to do, so 10-cent gains are lost in commissions. No, basically just need some advice. It depends. It depends on your entries. I mean your account value. You know, if you buy 100 shares of something and you're paying $6 in commissions, it has to run 6 cents for you to be profitable. But at the same time, you know, if you buy 10,000 shares, you're fine on that. So it's all about position size when it comes down to like covering commissions. Can you get hotkeys with most brokers? Yeah, you can, but if you're trading the way that I do, you're going to want a direct access brokerage that caters to day traders, like Lightspeed. If you have less than $25,000, you're going to want to go to CMEG. If you use either one of those platforms that cater to day traders simply for order execution, when you press your hotkeys, you're in that position within half a second, and you're out of it within half a second. So if you're using TD Ameritrade and you have hotkeys, I'm going to be able to enter a lot sooner and exit a lot quicker than someone that's not using a brokerage that caters to day traders. How would you rate this chart from best to worst for scalping from your experience? This is a really good chart. It's very predictable. You got everything that you wanted out of it. Break a key level, held support above it. Micro pullbacks right here. You see the red candles. You have micro pullbacks down here just by looking at the volume. Up here, another micro pullback just by looking at the volume. So this one's perfect. This is what you want to see. What is the name of the brokerage again? If you have less than 25,000, it's CMEG, Capital Markets Elite Group. If you have more than 25,000, you're going to want to use Lightspeed. All right, anyone else have any questions about the strategy here? I'm going to make some videos going over like brokerages and things like that also to post to YouTube. How do you find the stocks to watch each day? Just pre-market top gainers. I have this scanner and I have a couple more scanners that scan for volume and percentage change. What I'm looking for is a stock that has moved 5% in the past couple minutes. And then basically what I'm going to do, if I look at the 5% gainers, I'm going to catch them early. And I'll be able to enter after this first initial run. So up here in this area. But yeah, mainly I use the top gainers list on Webull. I use that for all charting. And usually you find what you need on there. And then basically I just click through them like this and I look for patterns that I like. Webull has 3 different settings for 9 EMA. How those need to be set. You should be able to just click on your indicator screen up here, which you can't see it because I don't have that shared, but you go to edit and you go to EMA and then you go to inputs and you type in your 9 and your 20 and then you go to style and you just make sure they're checked and they're on the chart. The EMAs are, I mean, the settings on Webull, you can't change them. Yes, light speed is direct access. And again, it's way better than TD Ameritrade because of order execution. Your orders are going to feel a lot slower through a platform like TD Ameritrade and all that stuff. Lightspeed, DOS Trader basically is a platform. CMEG is the brokerage. So whatever your brokerage is, if you have DOS Trader, your orders are going to fill through that brokerage. So if you use TD Ameritrade and you have DOS Trader, your orders are still going to fill at the same speed as they would through TD Ameritrade. Versus Lightspeed, I mean, your orders are going to fill instantly. Would you talk through the exercise of determining the key levels again with a different stock? I'll go over that. I don't have much time to go over, but yeah, I'll do that real quick. Basically, on this one, what you want to do is you want to go back to the daily chart. Here's the daily chart on this one. So basically what you're going to do is you're going to find the levels of rejection. Right here is one, that area. Then you're going to go up here and here's another one, levels of rejection. It's the wrong thing, hold on one second. Up here is another one. You're just looking for levels that bounce. Basically it comes down, rejects here, reverses, comes up, rejects here. And you want to go across the chart and see if that lines up. And if you look at this level, it lines up over here. So there's multiple areas of rejection using that same line. And you could do this at so many different levels just by looking at the chart. Here's another one. That's another support level. And then what you want to do is you want to go back to the 1 minute or 5 minute or whatever, and you want to see if they line up. And you can look at it and see that all of the wicks tipped over it, but the candle bodies didn't. So if I would have bought this stock down here at the break of this level, I would have scaled out up here into that resistance. And then you see what happened. It bounced off of that level and then crashed. But identifying key levels, look at the bigger picture. If you want to know what a stock is going to do, all you have to do is look left and see what it's done in the past. These lines on Webull will still be here a year from now, and if this stock is trading in that same price range, it's still going to be bouncing off of those levels. All right, I'm getting ready to wrap this up. Anyone have any more questions? And then I'm going to post this to YouTube immediately after. We're going on 44 minutes right now. I am glad to help any way I can. And for new members in here, my DMs are always open if you have any questions. If this is something that would benefit you, just click that link where it says join premium live and you'll be able to watch the live trading and learn as you trade. Thank you. I appreciate you for hopping on. And again, thank you everyone that's hopped on. I like to do this just so everyone knows what they're getting into before they actually join. I'm trying to build a team, and I think what I'm building is going to be the strongest day trading team in America, hands down. We have all of these eyes looking for the same things. We're not going to miss any plays. Do you have a strategy or anything specific that you do for when you're in a play and it halts? I've made a lot of money trading halts. You have to have hotkeys for that with a brokerage that caters to day traders for order execution. So if I'm in a play at $1 and it breaks $1 and runs up to $1.50 and it halts, what I'm going to do is I'm going to wait for it to unhalt, and if it jumps up, I'm going to draw a support line at that 150 level. If it jumps up, I'm going to scale out immediately, so I have my position, and then my exit is going to be that 150 level wherever the halt happened. That's going to be your support, and you sell immediately if it drops below that level. I'm going to wrap this up, and again, I'll keep doing these for the premium members for any questions and breaking things down into more detail so we can all learn. I'll do it once a week, and I'll announce the days that I'm going to do that each week. We got one more question here coming up, and then I'm gonna close this out. Thanks for taking the time to do this. Always extremely helpful. I'm glad to do it. I'm here to teach. That's what you guys pay me to do. So everybody that's a premium member, I will always make sure that you know everything you need to know to be successful. So never hesitate to ask any questions. I'm here to help. That's what I'm doing. My passion is teaching this. Uh, a year ago, I was broke and I didn't have any idea what to do. And I was following the Twitter gurus and I got burned over and over. So I taught myself how to do this. So my goal out of all of this is to get everyone away from that and teach people to do this on their own. You're actually is crazy. I can't wait for January. Thank you. I honestly can't wait for January either. For the new people popping in, I've liquidated all of my accounts, starting with 2,500 in January, and I'm gonna see how fast I can hit $1 million. My goal is 6 months max, and I think I will be able to do that easily. And you guys will get to follow along and make the same trades that I'm making along the way. And to new members, you can go to the Premium Daily Recap and you can look over the plays I've alerted. I think this month, so far, I've alerted 44 plays. 43 of them were green plays where we made money, and one of them was a play that was a false breakout, and it still jumped 9 cents. So technically, it was still green, but it dropped back below. So I'm calling that a bad trade. So we're 43 green trades on the month already, and one bad trade. You can't beat that. Consistency is key, and that's one thing that I pride myself on is I'm very consistent. I appreciate that, T. Anderson. Thank you. I'll be trying to sure. I appreciate it. And when you do join, if you ever have any questions, do not hesitate to ask, and I will be glad to help in any way I can. And I want each of you to be successful at this, and I want each of you to make money. If I make $1 million trading stocks, and I have, that doesn't say anything about me. It just says I'm a good trader. It speaks more about me to be able to teach you how to do that. And if you're in my Discord and I taught you and you're posting those $100,000 days, that says a lot about me because I'm willing to teach this, and I want everyone to be successful. I would rather you make $100 than me make 100,000. Simple as that. And anyone in the live trading can confirm that because they've witnessed it. But I appreciate everyone hopping on. My DMs are open. If anyone has any questions, feel free to drop in and ask a question. and I'll help you in any way I can. But other than that, I will see you all Monday morning, and we will bank, so be ready for it.